Hi everyone, so today I'm going to be doing a new company stock analysis. It's called Fiserv. So let's get right into it. Let's see how they make money, and then we're going to check earnings and then the financials of it. So I'm going to go ahead and share my screen as usual, and we're going to take a look. And as you can see here, it's just a quick Google search, and they are a financial technology and payment solutions. They're probably most known for their Clover payment solution, which is their point of sale, point of contact solution. Merchants use it for stores. It's kind of like Apple Pay, Square, those types of companies. It competes with them. But they do a couple of other things too. They help businesses and consumers move money and manage financial transactions effectively and efficiently, securely as well. There's banking and payments. Fiserv provides solutions for banks, credit unions, and other financial institutions to process transactions and manage accounts, offer digital banking services or merchant services like I said, the Clover platform that helps with accepting payments, manage sales, streamline operations, digital solutions for consumers, including mobile banking, bill payment, person-to-person payments, and then processing services for credit, debit, prepaid cards. Who do they serve? They serve consumers. They serve merchants like small retailers, small businesses, big and large businesses, and financial institutions as well. Have digital banking, all those things. So fairly easy company to understand. That's generally how they make money. So we're going to check the next thing, which is their earnings for Q2 of 2025. That came out July 23rd. Fiserv has had a bit of a sell-off, so it's good to just take a look to see what's actually happening. And as you can see here, adjusted earnings per share was $2.47, exceeding the average analyst estimate of $2.43 by 4 cents. This represents a 16% increase compared to Q2 2024. Adjusted revenue $5.2 billion, matching the analyst consensus. This is an 8% increase year over year. Organic revenue growth 8% overall, with 9% growth in merchant solutions. GAAP revenue is $5.52 billion. Free cash flow is $154 billion in the first 6 months, up 4% from the year prior. Earnings beat expectations, but organic revenue growth was slightly below some analyst estimates. Merchant solutions segment showed strong growth driven by the Clover platform. However, the segment's operating margin saw a slight decrease, and Fiserv narrowed its full year 2025 outlook for organic revenue growth to approximately 10% from 10 to 12%. So they did revise down, which is a bit of the reason for the sell-off. Adjusted EPS guidance for 2025 is between $10.15 and $10.30, representing 15 to 17% growth. Despite positive earnings result, Fiserv stock experienced a significant drop in pre-market trading following the announcement. So they still do have good, strong fundamentals. We're going to see it on Tipranks that the analysts are still fairly bullish on the stock. But we first need to check their financials. And we're going to start off, as usual, with their free cash flow to see what's going on here. And the free cash flow is actually pretty good, I would say. So 2021, it was 2.8, I believe, billion. Then it was 5.1 billion. So that right there, that's double. Very good in itself. Or it's a little bit less than double, but we'll say it's a double, more or less so. Very good in itself. There's nothing wrong with this statement right here. Now, if we check simply Wall Street, however, 5.1 billion, like I said, and then if we look a little bit farther into the future, 6.3 billion. So it's not doubling again. And this is probably the biggest problem that I have with this company, is that it's not growing as fast. It may be a good value play, but it's not a good growth play. There's quite a difference for it. Now, if we check the financial health of the company, which, give me a second, I have to just take a look. The debt is quite high. The debt's high, the equity is lowering, and the cash is really not even close. It hasn't even been close since 2020. So that I don't really love. Net debt to equity ratio is 104%. It's considered high. Reducing debt, Fiserv's debt to equity ratio has increased 63% to 108% over the past 5 years, which is true. They're probably trying to keep up with different acquisitions and things like that. Trying to keep up with the competition. So I don't love this, but we have to check their free cash flow or their discounted cash flow. And it's quite good. 49% undervalued. Really, however you look at it, it's going to be pretty much in line. Now, if we check, that was historical growth. If we check Wall Street forecast, Wall Street forecast is going to say it's 41% undervalued. So however way you look at it, it is going to be fairly undervalued, which is a good thing to see, I would say, in general. Now, the cool thing is that we'll see Tipranks and see if they confer with this analysis, about 40%. And it looks like they somewhat do. Actually, we're quite in line with it. 24 buys, 5 holds, 38%. So looks pretty attractive. Let me reload it one more time. Looks pretty attractive even right now because it's a low of 144, and I believe it's trading at 136. So it actually looks even attractive now, but remember, this is more of a growth play. This is more of a value play than it is a growth play. It's not growing as fast. So you're taking advantage of the sell-off. But it doesn't look like a totally bad company, I would say, in general. But I'm going to cover the Q3 when it comes out. I appreciate it. Thank you.